Hello, welcome to Forex for Uganda. I am Godfrey, and I want us to do a quick breakdown of a trade we had last week over Euro Australian dollar currency pair. Now I'm going to do a quick top-down analysis, breaking down the reason as to why we came to the decision to take this particular trade setup. Now, it's based on the concept of demand and supply. This is the monthly time frame. When you look at this, we see that price was testing this monthly resistance, or we will call it the monthly danger zone, and so it was bound for rejection and potentially a rebound to the downside. So the monthly is at a very strong area of resistance that was last reached in March of 2020, and now 5 years later it is retesting the same area. And the fact that it has taken so long for it to return to it means that this area is really strong. So from the monthly perspective, the fact that it's testing an area of resistance, it is bound to be rejected, and so our bias becomes bearish. So we'll drop down to the weekly time frame to see what perspective we got from it. Now this is the weekly time frame, and when you look at this, we see that price has been trending up strongly with this impulsive move to the upside, and you can see from the size of the candles that the momentum has been strongly bullish, and so it wouldn't be wise to bet against the bullish trend. All we can consider is the fact that price, moving to the upside, has been making a series of higher highs and higher lows. This is a higher high followed by a higher low. This is a higher high, and so our anticipation was that it was likely to retrace to create a new higher low, as the character of the market has been lately, before another push to the upside. So our expectation is that price will retrace, coming from the monthly danger zone or the monthly resistance into the range of this bullish engulfing candle to create a new higher low before a potential next move to the upside. So our bias, as far as the weekly time frame is concerned, is bearish. The fact that the market is overextended to the upside and bound for a reversal, because price doesn't move in one direction, it moves in a series of waves, and so we anticipate the next move to the downside. And so now our role is to look for a potential area where we could get a setup within the range of this strong bullish momentum candle, which closed as an engulfing, completely engulfing this previous bearish candle here, which some would refer to as maybe another block, but it's really a demand area that was created by price moving strongly to the upside. So we expect price to drop before another potential move to the upside. So our bias, as far as the weekly time frame is concerned, is bearish as well. So we'll drop down to the daily time frame to see what perspective we could get from there, and if maybe there are any setups that we see forming within the range of this weekly engulfing candle. This is the daily time frame, and we see that price had been ranging right here between these highs and these lows here, and it formed what appeared to be an inverted head and shoulders with a heavy move to the upside. Now we expect a retracement, not necessarily to come and retest this neckline, but at least the fact that we have a bullish price action setup, it should act as a magnet to pull price to the downside to come to at least within the range of this daily momentum candle, which is so close as a bullish engulfing candle on the weekly time frame. And also the fact that price is heavily overextended to the upside, we expect a retracement, since the structure of the market has been heavily bullish with price forming higher highs and higher lows. Now this being a higher high, we expect the retracement to create a new higher low before a further move to the upside, as the trend currently stands right now. But as of now, we don't have any particular setup that we see within the daily time frame, so we'll drop down to the 4-hour time frame to see both what perspective we get from it, and if there are also any setups from the lower time frame, which is this time the 4-hour time frame. Now this is the 4-hour time frame, and we see that price has also been making within this very time frame a series of higher highs and higher lows, and so we expect price to retrace to form a new higher low. Now remember, our role in the market is not predictive, it's rather reactive. So we're not going to be taking sell positions thinking that price is going to retrace. No, that is just our anticipation. Our role in the market is to just analyze then anticipate according to our analysis the flow of price, and if it plays out exactly like we had anticipated, if it follows all our entry criteria according to our trading plan, then we execute on the position. Now, looking at this 4-hour time frame, we see that actually price formed this area of demand right here, which was formed by this rally base rally, and now we expect institutional orders to be in the waiting right here in this area of demand. Now that is the setup that we are looking at for us to execute our entry, as the demand orders within this area of demand are filled by the institutional order flow. And so I'll play this forward so you can see how it exactly played out. Price took a while before returning to the same area, but that brings in the aspect of both patience and discipline that are demanded in the trade of currencies, especially when it comes to swing trading. So right here, price retraced and tested this area of demand that we had been waiting for, and so our trade was taken from the touch of this demand area, and the stop loss was slightly below, just about a pip or two below this demand area right here, and our target was way up here, but all I was looking at was taking at least a 3-to-1, which I was able to get right here, and so that's all that I was targeting. Now, of course, it had the potential to continue to the upside, but that was my target. When it comes to swing trading, I usually look at a 3-to-1 reward for every risk that I take. And so let's play this out so you can see how it eventually played out. It first consolidated a little bit, came close to top out area, but then reversed and continued to the upside. But right here, it was able to hit the 3-to-1 target area. So that was the trade setup based on a demand and supply concept. And for more educational content, kindly keep tuned to the channel and look out for videos that I'll be posting as educational content to help you. In the meantime, you could check out forexschooluganda.com for more educational content. Thanks for watching. I'll see you again.